Hey everyone, welcome back to the channel. If you're new here and looking to dive into the trading world, you're in the right place. Today, we're talking about some of the most common trading mistakes beginners make, and most importantly, how you can avoid them. Trading can be intense, but with the right approach, you can dodge these pitfalls like a pro. So, stick around because this is going to be super valuable. Listen, we've all been there. You see the charts, you hear the success stories, and you think, how hard can it be? But the truth is, trading takes skill, strategy, and a whole lot of patience. The good news is, by learning from the mistakes others have made, you can get a serious head start and set yourself up for success from day one. And look, if you're ready to start trading and learn in real time, there's no better way to do it than by creating an account on Quotex. Hit that link in the description. Signing up there not only supports this channel, but it gives you a powerful tool to start trading smartly. Let's jump in. Alright, let's start with a classic mistake, jumping into trades without a plan. So many beginners skip the basics of goal setting and risk management. They treat trading like a casino, putting money down based on gut feelings or what they heard from some guy on Twitter, but that's a recipe for disaster. Think about it, would you ever start a business without a business plan? Would you set out on a cross-country road trip without a map? Of course not. Trading is no different. You need to know your destination, your financial goals, and how you plan to get there. A solid plan means knowing exactly what you want to achieve. Are you looking to grow your wealth long-term? Are you trying to generate some passive income? Be specific. Write down your goals, make them measurable, and set realistic timelines. And here's the crucial part, risk management. You need to know how much you're willing to risk on each trade before you even think about hitting that buy button. Remember, every trade has the potential for losses. It's not about avoiding losses altogether. It's about managing them so they don't wipe you out. Set clear goals. Start small and keep things achievable. Quotex even has demo accounts, so practice before you commit real funds. This is where having a plan really pays off. By setting clear goals and managing your risk, you're taking the emotion out of trading and making decisions based on logic and strategy. Trust me, your portfolio will thank you for it. Remember, if you fail to plan, you're planning to fail. Don't let that be you. Take the time to create a solid trading plan. It's the foundation for everything else. Okay, so you've got a plan. That's awesome. But here's where a lot of beginners trip up. Ignoring risk management. They get so caught up in chasing profits that they forget about protecting their downside. One of the quickest ways beginners lose their investments is by not managing risk. It's tempting to go all in when you're confident about a trade. But remember, the market is unpredictable. No matter how good a trade looks, there's always a chance it could go against you. Risk management isn't just a backup plan, it's the core of any sustainable strategy. It's about protecting your capital so you can stay in the game for the long haul. Because even the best traders have losing trades. The difference is, they know how to manage those losses so they can live to trade another day. So how do you actually manage risk? It starts with understanding position sizing. This means determining how much of your capital you're willing to risk on any single trade. A good rule of thumb is to risk no more than 1 to 2% of your total account balance on any given trade. Limit your trades to small amounts and always use stop losses to protect your funds. This way you're building a strategy that lasts. Quotex has tools to set these limits and make sure you're trading safely. Another crucial tool is stop loss orders. These are orders you can set with your broker to automatically sell your position if the price of an asset drops to a certain level. Stop losses are your best friend. They take the emotion out of trading and help you cut your losses before they get out of control. Look, I get it. No one likes to think about losing money. But by implementing proper risk management techniques, you're not just protecting yourself from disaster, you're actually setting yourself up for long-term success. Let's talk about the elephant in the room, or should I say the emotions in your head. Emotional trading is another one of those mistakes that trips up countless beginners. Emotional trading is another big one. Whether it's the thrill of a quick win or the frustration of a loss, emotions can lead to reckless decisions. You start making impulsive trades based on fear or greed, rather than logic and strategy. We've all been there. You see a stock going up, and you don't want to miss out on the action, so you buy in without doing your research. Or a trade goes against you, and you hold on too long, hoping it will magically turn around. Spoiler alert, it usually doesn't. Here's the thing. Trading is a marathon, not a sprint. It's about making calculated decisions based on data and analysis, not letting your emotions call the shots. Remember, the market doesn't care about your feelings. The key? Stay level-headed. Trading is a numbers game, not a feelings game. It's about removing as much emotion as possible and sticking to your plan. Easier said than done, right? Tip: whenever you're feeling too excited or frustrated, take a step back. Remember, trading is about long-term growth, not quick gains. Here are a few things that can help. First, stick to your trading plan. Having a plan you can refer back to will help you stay grounded when the market gets crazy. Second, take breaks. Step away from the charts, go for a walk, clear your head, and finally, don't be afraid to cut your losses. It's better to take a small loss than to let your emotions turn it into a big one. Remember, successful trading is all about discipline and emotional control. By learning to manage your emotions, you'll be way ahead of the game. Alright, we've all heard the saying practice makes perfect. But when it comes to trading, sometimes less is more. Beginners often think the more they trade, the more they'll make. They see it as a get-rich-quick scheme, thinking that constant buying and selling is the key to riches. The reality? Overtrading can actually drain your account faster due to fees, impulsive moves, and emotional fatigue. Every time you trade, you incur transaction fees. And the more you trade, the more those fees eat into your profits, or worse, amplify your losses. Not to mention, the more you trade, the more likely you are to make impulsive decisions. You start chasing every little price movement, trying to squeeze out profits from every trade. This kind of frantic trading is exhausting and rarely leads to long-term success. Think of it like this. Would you rather swing at every pitch in baseball, hoping to hit a home run every time? Or would you rather wait for the perfect pitch, the one you know you can knock out of the park? Tip: set daily or weekly trade limits. Focus on quality over quantity, and watch how it improves your success rate. That's what successful trading is all about: patience, discipline, and waiting for the right opportunities. Instead of trying to force trades, focus on quality over quantity. Take your time, do your research, and only enter trades when you have a high probability of success. Remember, trading is a marathon, not a sprint. Pace yourself, be selective with your trades, and you'll be much better off in the long run. This last mistake is a big one, and it's something that can hold traders back at every level, not just beginners. See, the learning never stops in trading. Markets are constantly evolving, new strategies emerge, and what worked yesterday might not work tomorrow. Learning doesn't stop once you place your first trade. You might think that once you've got the basics down, you're good to go. But the truth is, the markets are constantly changing, and if you're not constantly learning and adapting, you're going to get left behind. Successful traders are always researching, refining their strategies, and improving. They're like sponges, constantly absorbing new information and looking for ways to improve their skills. They read books, attend webinars, follow industry experts, and never stop seeking knowledge. Remember, the financial markets are incredibly competitive. You're up against algorithms, institutional investors, and other traders who are all vying for their piece of the pie. The only way to stay ahead is to constantly be learning and improving your game. Motivational affiliate mention. And if you're looking for a place to start, remember that Quotex is a fantastic platform for learning as you go. The tools are all there. It's just about taking that first step. Hit that link, sign up, and start learning by doing. Imagine looking back in a year and seeing how far you've come. So, how do you become a lifelong learner? Make it a habit to dedicate time each day or week to learning something new about trading. Whether it's reading a book, watching a webinar, or practicing on a demo account, there are endless resources available to help you grow your knowledge. Remember, the more you learn, the more confident you'll become as a trader, and that confidence will translate into better decisions and ultimately, better results. Alright, that's it for today's video. Thanks for sticking around to the end. Trading can feel challenging at first, but with patience and a commitment to avoid these common mistakes, you'll be amazed at what you can achieve. Remember, everyone starts somewhere. The key is to learn from the mistakes of others so you can avoid making them yourself. And remember, if you're serious about getting started, head to the link in the description to create an account on Quotex. Support this channel, but more importantly, invest in yourself. Start building a path to financial freedom, one step at a time. Don't wait. The journey begins now.